Most traders keep a journal for 2 weeks and then stop. Not because journaling doesn't work. It works better than almost anything else you can do to improve. They stop because they don't know what to do with the data. They write down entry, exit, profit or loss, and then they stare at a list of numbers that tells them nothing about why they are winning or losing. Today, I am going to show you a different way to review your trades. Not just what happened, but why it happened, and what the journal is actually trying to tell you. A trade journal is not an accounting ledger. It is a diagnostic tool. The question it is designed to answer is not how much did I make? The question it is designed to answer is, was my decision-making process correct, regardless of the outcome? A trade can be perfectly executed and still lose. A trade can be taken impulsively and still win. Profit and loss alone tells you nothing about the quality of your process. That is what the confluence scorecard changes.
Here is how the scoring system works. Every trade gets scored against the 7-step top-down framework from video 10. 1 point for each of the 5 key filters. HTF bias confirmed, price in correct discount or premium zone, 4H SMC confluence zone present, OTE alignment, and liquidity sweep completed before entry. Maximum score is 5. A score of 5 means every institutional filter was aligned before you entered. A score of 3 or below means you were guessing, even if the trade won. We score every trade the same way every time.
The most important insight the scorecard reveals is this. Your losing trades are almost always low-scoring trades. When you go back through your last 20 trades and score each one, you will typically find that the trades scoring 4 or 5 produce a positive expectancy, even if some of them lost. And the trades scoring 1, 2, or 3 produce a negative expectancy, even if some of them won. That gap between high-scoring and low-scoring trade performance is the single most motivating piece of data you will ever see in your trading career. It proves the framework works. It proves you already know what you are doing wrong.
Trade 1, EURUSD, bullish, 2.1 R winner. Score, 5 out of 5. Let me walk you through why this trade scored a 5. Daily chart, clear bullish structure, confirmed BOS, price in the lower 40% of the daily range, solidly in discount. 4-hour chart, a clean order block formed at the 68% Fibonacci level, with a fair value gap partially overlapping it. That is OB plus FVG plus OTE, 3 filters at one level. Then a wick swept the prior session high before price turned and entered the zone. 15-minute chart, a bullish engulfing candle formed inside the OB and closed above the FVG boundary. Entry at the close, stop below the engulfing low, target at the 4H swing high. Trade ran to 2.1 R before the target was hit, and I exited. This is the template. Every future trade should be measured against this one. Trade 2, GBPUSD, bearish, -1 R loss. Score, 4 out of 5. This is the trade I want to spend the most time on, because it lost, but the score says the process was right. Daily, bearish structure, price and premium, confirmed. 4-hour, a valid bearish OB and FVG confluence in the premium zone. OTE alignment confirmed. The sweep occurred. A minor swing low was taken out before price entered the zone. The one filter I missed, the confirmation candle on the 15-minute was an inside bar breakout, but I entered on the break of the inside bar high rather than waiting for the candle to close. It was technically still valid. The trade simply hit my stop before reaching the target. Score, 4 out of 5. Process correct. Outcome, loss. That is an acceptable result. That trade should be taken again in identical conditions. Trade 3, gold, XAUUSD, bullish, 3.2 R winner. Score, 5 out of 5. This is the highest R multiple of the 5 trades, and it earned it. Gold produced a textbook setup.
Daily bullish structure, price deep in discount at the 72% Fibonacci level, a 4HOB and FVG stack that aligned perfectly with the OTE zone, and a clear sweep of the prior session low on the 4H chart before the reversal. The 15-minute confirmation was a pin bar with a wick that extended 38 pips below the OB boundary and closed back inside it. Entry on the pin bar close, stop 12 pips below the wick low, target at the next BSL cluster 38 pips above. The trade reached target in the New York session the following day, 3.2R. This trade is a reference trade. Save the chart, annotate it fully, and use it as your benchmark for what a 5 out of 5 setup looks like on gold.
Trade 4, EURUSD, short attempt, -1R loss, score 2 out of 5. This is the trade that should not have been taken. I scored it honestly. Daily bias. I had convinced myself the structure was bearish based on a lower time frame break that had not yet confirmed on the daily. That is a score of 0 on filter 1. Price was not clearly in premium. It was near equilibrium. 0 on filter 2. There was an OB on the 4H, but no FVG confluence. Half a point for the OB alone. I'll give it a 1. OTE was not aligned. 0. The sweep had occurred, so I gave it a 1 for that. Final score, 2 out of 5. I took this trade because I had not traded in 2 days and I was impatient. Impatience is a score of 2 in disguise. The journal caught it, the market charged me for it.
Trade 5, GBPJPY, bullish, 1.8R winner. Score, 3 out of 5. This trade won, and the score says it was marginal. That matters. Daily structure was bullish, 1 point. Price was in the lower half of the range, but not clearly in the discount zone. I will give it half a point, round it to 0 for strictness. The 4HOB was present with no FVG, 1 point. OTE was not fully aligned. The OB sat just outside the 79% band, 0. The sweep had occurred, 1 point. Final score, 3 out of 5. This trade won because the daily bias was correct and the OB held, but it was a lower probability entry than trades 1 and 3. The lesson? A winning trade with a low score is not evidence that the framework is optional. It is evidence that you got lucky. Do not mistake a low score win for a validation of poor process.
Now, let's look at all 5 trades together. The pattern is unmistakable once you see it laid out. Trades 1 and 3, the two 5 out of 5 trades, produced plus 2.1R and plus 3.2R. Trade 2, the 4 out of 5, produced minus 1R, but the process was sound. Trade 5, the 3 out of 5, produced plus 1.8R by luck. Trade 4, the 2 out of 5, produced minus 1R from a trade that had no business being taken. The net result across 5 trades is plus 6R. But here is the number I care more about. If I had only taken the 4 out of 5 and 5 out of 5 trades, the net would have been plus 4.3R from 3 trades. If I had only taken trade 4, the 2 out of 5, that single bad trade cost me 1R and damaged my expectancy. The framework is already working. The journal proves it. There are 3 patterns the confluence scorecard reveals that you cannot see any other way. Pattern 1. Most traders losing trades cluster at score 1, 2, and 3. Once you see that in your own data, you cannot unsee it. Pattern 2. The trades you feel least confident about before entry are often the high-scoring ones, because the high-scoring setups require patience, and patience creates uncertainty. Pattern 3. The trades you feel most confident about, the obvious ones, are often low-scoring. Overconfidence is a score of 2 in disguise. The journal does not lie, your feelings do. Here is the journal review process in 6 steps. Step 1. After every closed trade, score it against the 5 confluence filters immediately, before you see the final outcome if possible. Step 2. Record the score, the result in R, and 1 sentence about what the setup looked like. Step 3, at the end of every week, group your trades by score. Separate the 4 and 5 trades from the 1 to 3 trades. Step 4, calculate your win rate and average R for each group separately. Step 5, identify the one recurring filter that your low-score trades are failing on. That filter is your #1 area for improvement this week. Step 6, set a rule. If the score is below 4, there is no trade. Not a small trade, not a reduced position. No trade.
The free resource for this video is the Trade Journal Scoring Sheet, a printable PDF that combines the Confluence scorecard with a trade log. Each row has the 5 filter checkboxes, a score out of 5, an R result field, and a notes column. It also has a weekly summary section at the bottom where you calculate your 4 to 5 score win rate versus your 1 to 3 score win rate. Start using it this week and come back to this video in 30 days. The data you collect in that time will tell you more about your trading than anything I can teach you. The link is in the description. Video 13 is the psychology deep dive. We look at why you take low-score trades even when you know better and what to do about it. That video is one I have been building toward since video 1. Link at the end.